Empty pockets never held anyone back. Only empty heads and empty hearts can do that. Norman Vincent Peale, my friends, each and every day, 10 to 15 minutes. That is all we ask. Let's jump into these charts. We will be covering our trade execution summary grid. This is for Friday, the 16th of May. Remember, that grid is available to you each and every day. If you just sign up at chartingwealth.com for our emails, you'll get this video and you'll get the trade execution summary grid. You don't have to bother to write all this down. Let's jump first into the S&P 500. Nice day, up about 0.5%. A good bit more than the NASDAQ 100. We have a nice green candle. We're at 65% bullish on this. You can see on the half day where we've been running along sideways. We did pop up some there at the end of the day. Of course, we told you to be looking for green up candle, decent volume. You saw it in the morning and the afternoon. Now, as we look at this overall week, it looks beautiful, except we don't have a lot of volume backing up the move. We don't have it on the 2-day either. And of course, this is the Wednesday, Thursday. There'll be a new 2-day candle tomorrow. It did pop up a little higher. We had that Monday, Tuesday 2-day candle that was a decent one as the week started off. You can see where it really boomed up on Monday morning and again slid sideways there Wednesday afternoon, Wednesday morning and afternoon, and then into the morning on Thursday and then popping up. So a decent day. We're 65% bullish, directional probability next 5 days. Our entry points around a little bit less than we are right now, looking at about a $5.19 movement, 70% back test accuracy. So we're getting there. Again, if you're in the trade, of course, you're continuing to let things run. Jumping in the trade, we're only at 65%, a little bit more than a coin toss. So we're continuing our uptrend. We're continuing to ride this baby out. But at the same time, jumping in, just be aware. You're going to need, as we always say, when we start giving you these probabilities, they aren't you just go ahead and pull the trigger in the morning, jump into your practice trade. You want to see things backed up on the charts for that continued movement. Now, the NASDAQ, because it was up only 0.11% for the day, and again, you can see where it's sliding sideways, but ticking up, slowing down, particularly after that huge launch on Monday. But as we look at things, we're 60% bullish, a little less, of course, than the S&P. The movement was less, 65% back test accuracy. So again, we'll continue to stay in that trade if you're in it. Be careful if you're looking to get into it. Make sure that you have the candles backing you up and the volume. What do we see on 20-year U.S. government bonds? Nice to see how much on the weekly chart we have seen this down move jack up on the volume. We haven't been to average volume since all the way back on the week beginning the 7th of April, when we had that really big down plunge and a lot of volatility. You can see movement on the top of the candle and the bottom of the candle, then 2 more weeks of down movement, popping up the week of the 28th of April, and then moving back over to the down move. We are 75% bearish. We were yesterday also on a continued down move, seeing about another $1.15. Exit points around $85. Why? Because we've got some resistance there. 80% back test accuracy for down move. Now, again, it was what? Up for the day. But we still have all that pressure pushing things down. So would you jump in now? No, of course you wouldn't. But if things revert to the mean and start moving down, then of course you would look to do that. Remember, these red volumes, they don't mean that it's negative volume. They only mean that we opened lower than the prior close. Got a nice 2-day candle, got a nice weekly candle. Have that up move. And again, we're still in this down move. If you jumped into it early, you can see what has it been doing? Going down, popping up, then rolling back over. Didn't manage to push through the weekly trend line till it fell off again. Now, could bonds be stopping their down movement? Absolutely. And if we see a continued backtrack, then of course we wouldn't get in, but be ready to jump in potentially to a down move if you see red down candles forming in the morning and or afternoon with decent volume. Now, again, all these have their caveats. You just don't pull the trigger because you're at 75% bearish. I'm just going to jump in. You can, but you're gambling. You are not trading. And again, we're not a stock calling, bond calling, gold calling, or Bitcoin calling service. We're an education firm. I want you to practice trade with us. Learn by doing. And remember, the down move on bonds is what? You're either looking to practice trade puts or TBF. I explained this yesterday. I explained it a lot. Tango Bravo Foxtrot. What is that? That's the single inverse for bonds. Boom, it's been going up the same percentage that bonds have been going down. And again, when you look at the price there, pretty cheap. You know, around $24, $25. So if you're into fractional trading, for a mere $100, you could purchase 4 shares if and when that presents itself. And if you screw totally up and lose 20%, it's $20. Please be careful and only start going to fractional trading when you're starting to get the hang of paper trading. Why? Because you get to actually enter trades, set good till canceled sell orders. If you're into stop losses, you can set those things. You can mess around with all that your brokerage firm allows you to do, and you're risking minimum amounts of money, but you're learning how to enter trades, exit trades, manage those profits. Maybe selling off half of it when you hit one time your ATR and letting the rest of it ride. So think about it. Give it a try. Doesn't hurt to practice. Now, let's jump into gold. Where are we on gold? 70% bearish on gold still. It rebounded for the day, 1.60%. Lots of volume in the morning, fell off in the afternoon. But you can see where the Heikin-Ashi candlestick was up in the afternoon. Again, it's hard to tell totally what was going on in the market because the Heikin-Ashi candlesticks do what? They give you the average pace of price movement. That's why we use it. It cuts out so much of the noise. If you don't know what Heikin-Ashi candlesticks are about, I'm going to make a note to myself right now. I'm going to share again the Heikin-Ashi candlestick training that we have at the end of today's video. If you haven't listened to it, hadn't listened to it in a while, please do. And make sure you understand the formula for the calculation of Heikin-Ashi candlesticks. Why? Because then you'll understand better what it is you're actually seeing. It's not high open, low close. It again helps you see the average pace and takes out so much of the noise. That's why we use it. So still 70% bearish on gold. We were 65% bearish yesterday, 70% bearish today. We're, let's see, $2.25 expected move, 75% back test accuracy. And our back test accuracy comes from looking at these same moves over time and seeing when they worked and when they didn't. So please, again, pay attention, follow these charts, practice trade to your heart's content, and learn by doing. Lastly, we will look at Bitcoin. Bitcoin, we were neutral yesterday, about 55% directional probability of an up move, 60% backtest accuracy. Nothing to write home about. We are 60% bearish today, going up some, 65% backtest accuracy. Bitcoin down a little bit for the day. See where it was down on Wednesday, down in the morning. On Thursday, looks like it popped up a little bit. Recovered some of that loss in the afternoon. Still down 0.07% for the day. But Bitcoin moving up that trend line. Nice week, getting close to the high of highs. And we'll see Bitcoin going to get up on that. It may bounce on it and move back down, pull back, or it may soar through it. Going into our 4th week of up moves on Bitcoin. Pretty to see, isn't it? Only thing that concerns us, of course, is we don't have the volume backing up. We didn't have the above average volume. Have to go back to the 21st of April, the beginning of this move. That is where we are, my friends. We always love to hear from you. Hey, we just published and sent out an interesting article on Michael Burry. Remember The Big Short? Remember that movie? Steve Carell, I believe, played Michael in it. He has changed up his portfolio. We tell you what changes have been made. Check that out at chartingwealth.com if you hadn't already gotten the email. And again, go to Charting Wealth, sign up, get our information for free each and every day. That list is never spammed, never shared. And if you really appreciate what we do, become a Patreon member. First thing you'll get is a copy of my newest book, 3-Wave Trading Advantage. The 3 waves are the weekly chart, the 2-day chart, and the 195-minute or the true half-day chart, and how we use them. We explain Heikin-Ashi candlesticks, volume metrics, how we use all of this along with trend lines to enter and execute our trades, how we use the average true range, all the great stuff that we talk about here every day, fully explained in the free book you get by sponsoring us at Patreon. You also get 3-part series, Options Made Simple, The Charting Wealth Way. God bless. All the best from the team here at Charting Wealth.